Welcome back. You're tuning into Market Fatafat, where we are taking you through all the stocks and news on the back of news floor and the back of technicals. And now on the technicals, we're joined by Ajit Mishra, who's the SVP Research Religare Broking. Hi Ajit, thank you so much for joining us today. Ajit, your first stock for the day is Apollo Hospitals. Tell us what is your sense on Apollo Hospital? Because if I look at the chart, Apollo Hospitals that has been consolidating. So from here on, how do you see this moving?
Hi, good afternoon. So yes, we see that it's been almost a month now that the stock has been hovering in a tight range while maintaining above its medium-term moving average, that is the 100 days of exponential moving average on the daily charts. But if you see that, the price action starting from the beginning of the year, seems like a formation of a reversal pattern or a continuation pattern, which is cup and handle pattern. And if we see the theme in totality, means this entire space, hospital-related stocks, be it Apollo, Fortis, Mix Healthcare, NH, all these stocks are buzzing in the trade. So we believe that in the next move, probably we can see a similar kind of attraction in Apollo Hospital once this stock crosses 7100 mark. So it's a good area to accumulate the stock. We believe that 6800 should act as a strong support now. So in a market like this, wherein we are seeing excessive volatility, one can consider Apollo Hospital for fresh buying with 74,750 as a position target.
We could see levels of 7,400, 7,500 on Apollo Hospitals. That's the view coming in from Ajit Mishra. But shifting focus to Divi's Laboratories then, Ajit, tell us, why is the stock on your radar this afternoon?
We are seeing mixed trend within the pharma space, but Divis is among the consistent performer, means the stock is still quoting around the record highs. Of it, we are seeing a marginal consolidation and a pullback around the short-term averages. So, considering the overall tone, texture, and the prevailing market scenario, it's prudent to stick with the names selectively from the defensive basket also. The Divis fits the bill, and we believe that this zone close to around 65 and 600 is a good buying area, and with the potential of stock inching towards 7,000 plus levels in the near future. So here we see a buying opportunity, around the current levels, and one can add more in case if it splits below 6,500 mark, with 6,400 as a stop loss and 7,000 as a positional target.
All right, moving on from Divi's Lab to
the pharma stocks on your radar this afternoon. We just discussed Divi's and now Glenmark Pharma as well.
That's right. So, Ashisha, in a market wherein we are seeing very less stocks showing consistency in the trend, means we are seeing that on the rotational basis every now and then almost all the sectors barring FMCG, they have participated in the move so far. But when it comes to pharma, we have very select few names where we are seeing consistency in the trend. So apart from Divis, Glenmark, it has witnessed a year-long consolidation range breakout and it's been steadily inching higher in the last 1 week. Despite all this negativity that we are seeing in the market, today is still quoting around the day's high, 1.5% kind of a gains with decent volume. So we believe this momentum is here to stay, and gradually the stock can inch towards record highs, means 1,800 plus levels. So here one can accumulate Glenmark also at the current levels with 1,570 as stop loss.
All right, so that's Glenmark from
Fintech. Then, Ajit, although this has been a wealth creator for investors, the stock is down nearly 20% on a year-to-date basis, currently at 14,292 odd levels. Where do you see the stock headed from here on?
Yeah, so Sisha, Dixon is basically currently trading at a very critical juncture, the long-term averages on the daily chart. So it's not that it's testing this average for the first time this year. In past also we've seen a brief decline of these levels followed by a rebound, but this time around the kind of consolidation that we are seeing in the last 7-8 trading session, this indicates possibility of further decline or more pain, maybe closer to around 13,200 to 12,600 is something that the stock might witness. So considering that, those who are sitting on the long positions, especially, they should at least reduce their position right away and maintain a stop loss at 13,800. In fact, one can look to go short also if somebody is okay taking aggressive positioning with 15,000 as a stop loss and 12,600 as a target.
Alright, that's decent tech on the charts.
That news piece, but IHCL Indian Hotels. Ajit, where do you see the stock headed?
So we were seeing very tight range consolidation for almost a month while holding over these major averages. But now we are seeing early sign of distribution or a breakdown in the stock. Means the stock has slipped below its long-term averages in today's session. And the way we are seeing, the volumes also inching higher, with the breakdown. Probably we can see this, consolidation to end with a breakdown and possibly a retest towards 680, 670 area. So again, the recommendation is here to liquidate your position, long position if you are sitting or waiting for a breakout because indications are in the favor of otherwise. And in fact, one can look for a short position also with 755 as a stop loss and 680 as a position target.
Alright, that's Indian Hotels on the charts, but getting you all the buzzers in trade. Let's resume then. Ajit, coming to you. You picked out Indian Bank for us. And entire banking pack is under pressure today in a market like this. But in the last 1 month, Indian Bank has given some decent moves of 7.5%, 8%. Tell us, where do you see the stock headed? Because potentially the stock seems to be in an upward trend. It is heading towards its 52-week high, is it?
Yeah, that's right. In fact, the stock is trading at the record highs, and it's been almost nearly like 2-3 years consolidation range that it has ended of late, and since then we are seeing this positive tone continuing. And if you see that the banking as a space also, we are not seeing any major decline. It's just that we are seeing correction in most of these PSU names, but Indian Bank on the other hand is holding strong and inching higher with every passing day. So I believe that the sector outperformer or the stock which is showing relatively higher strength will continue to outperform in the good market scenario also. So here one can accumulate at current levels, add more in case if it sees any dip around 600, and for the entire position one can maintain a stop at 575. Upside 700 plus level is something that one can maintain as a positional target in next 1 month.
That's the view coming in on Indian Bank, but is weak market. But HUL, Hindustan Unilever, that's the stock that you picked up for us. Ajit, tell us, what do charts indicate for this FMCG major?
So, if you see that there is one sector which has been consistently underperforming, and that is FMCG. Means in the entire run, we hardly saw any participation. If we exclude a couple of names like Britannia and Marico, majority of the stocks they are dealing under pressure or seeing consolidation. HUL has recently made an attempt of recovery, but it couldn't surpass the major hurdle of the long-term averages and performed a fresh shorting pivot. So we believe that there could be a possibility that the stock might inch towards its previous swing low close to on 2150. So here it's offering a shorting opportunity with stop loss at 2400.
Really timed out in this edition of Market Fatafat. Ajit, Rabinder, Kanishka, thank you so much for taking the time out and joining us and giving us all the stocks in focus today. But moving on to the fact that the government has proposed amendments.
But that's all the time we have on this edition of the show. Nifty now 170 points lower, but all the market action will continue on the other side. Don't go anywhere.